Washington, D.C. Despite high inflation and a slowing economy, firms throughout the country continued to hire quickly in November, demonstrating resilience in the face of the Federal Reserve's relentless interest rate hikes. The Labor Department reported on Friday that the economy added 263,000 jobs while the unemployment rate remained at 3.7%, still very close to a 53-year low. Only little less jobs were added in November than in October, 284,000 more. The hiring last month represented a significant rise. America's labor market has confounded critics all year long, adding hundreds of thousands of jobs each month despite rising prices and the Fed imposing ever higher borrowing rates. The hiring and salary growth were so robust that there were immediate worries that the Fed could have to maintain high rates even longer than many had anticipated. The Dow Jones Industrial Average dropped more than 400 points as trading began on Friday as the stock market responded with anxiety. Lorena Yarusi, senior U.S. economist at stockbroker T. Rowe Price, said that this will serve as a warning to the Fed and the markets that the fight against inflation is far from over. They actually need wage pressures to be moving downward more steadily. Therefore, it is necessary for interest rates to stay higher for a longer period of time. In a speech this week, Fed Chair Jerome Powell emphasized that the rate of employment and wage growth was too high for the government to quickly reduce inflation. To force inflation back toward its 2% annual objective, the Fed increased its benchmark rate from nearly 0 in March to almost 4%. Two significant industries, education and healthcare, as well as a group primarily made up of restaurants, hotels, and entertainment businesses, accounted for more than half of the job growth last month, or 170,000 new positions. Workers lost to the epidemic in both industries are still being replaced. The majority of other industries now employ more people than they did before the pandemic. Despite the recent high-profile layoff announcements from internet businesses like Amazon, Meta, Twitter, and real estate broker Redfin, a category that includes technology professionals actually increased jobs. Recently, some indications of a slight slowing in the labor market have surfaced. These include trends that point to some rising prudence among workers, such as a slight decrease in job postings and a decline in the number of people quitting their jobs. However, consistent hiring and rising wages across a wide range of industries have contributed to U.S. households driving the economy. Even after accounting for inflation, consumer spending increased at a healthy rate in October. The number of cars, restaurant meals, and other services purchased by Americans increased. Even while their spending has been stimulated by consistent hiring and rising incomes, Americans are also using credit cards more frequently to keep up with rising costs. Many people are also spending down their savings, which is a trend that cannot go forever. In part because of people's worries that the Fed's escalating rate hikes will ultimately cause the economy to crash, some signs of weakness have raised concerns about a possible recession next year. A growing number of businesses, particularly in the media, technology, and retail sectors, have announced high-profile layoffs. Along with tech behemoths like Amazon, Meta, and Twitter announcing job cuts, smaller businesses like DoorDash, Redfin, Best Buy, and The Gap have also announced they will lay off staff.